Hey, what's up guys? It's Ezekiel Chiu here. So most traders, they trade the triangle patterns the normal way, the textbook way. And you wonder why their accounts keep bleeding, right? So today we are diving deep into how to trade the ascending triangle pattern the pro way. And you will also learn a step up, aggressive entry and exit method that can make you really big money. So plus, I will also show you how to protect your trade and maximize the pattern big time. So this is the only video that you need to watch on how to make money with triangle patterns. Okay, so first off, what is the ascending triangle pattern? This pattern typically forms when price is already in an uptrend. So which means that the prices have been steadily moving higher. If you picture this, you have a series of higher lows where the buyers, they step in aggressively, moving price higher at each price level. So at the same time, you will notice a resistance level that price keeps testing but can't break through. So this creates the triangle shape on the chart, right? With the horizontal line acting as the ceiling that the price is trying to break, while the rising trend line represents the increasing pressure from the buyers. What does this mean? And why is this such a big deal? This ascending triangle pattern indicates that the buyers, they're gaining confidence and they're willing to step in at higher prices, right? While the sellers are struggling to push the price down. So it's like tug of war, right? Between the buyers and the sellers. And obviously you can see in this case, the buyers are starting to win. So as price continues to test that resistance level, the buying pressure builds up, right? So this build up often leads to what? A breakout, right? So when price finally pushes through and above that horizontal resistance line, it is going to trigger a wave of a lot of buying and enthusiasm in the market itself. So for traders, oh, this is the moment that we have been waiting for. It's our signal that this upward momentum is likely to continue. As with any pattern, there are a few things that you want to keep an eye on to confirm its validity, right? So first off, you got to make sure that the pattern is forming what? During an existing uptrend. So if you see the pattern appearing after a significant downtrend or in a sideways market, it might not hold the same weight. Second, watch for price to create at least 2 or 3 touches on the upper resistance line, right? With a series of what? Higher lows along a rising trend line, right? This is the signal, the sign that the pattern is solidifying. You want to see that consistent pressure building up against that resistance. The ascending triangle is a powerful pattern, and understanding the psychology right behind it is going to give you a big edge itself, right? So the real power of the ascending triangle comes from the battle that is happening between the buyers and the sellers, right? So on one side, you got the buyers, right? Every time the price dips, right, they step in, right, with more confidence, buying at higher and higher and higher prices, right? So they are basically saying, right, we believe that the market has room to go up. We are willing to pay more each time. So it shows there's a lot of growing optimism and strength from the buyer's side. Now on the other side, you got the sellers who are holding firm at that resistance level. So they keep pushing price back, like they keep trying to stop the price from climbing any higher. So it's like a tug of war, right? They are putting up a fight, right? Believing that they can hold their ground. So and preventing what? The prices for the sellers from breaking out, right? But here's the thing. As the pattern develops, you start seeing the buyers gaining more and more strength. With each of the pullback, right? They step in sooner. They don't wait for price to drop too low. They step in sooner, driving the price up higher and higher and higher each time, which results in the higher lows, right? So meanwhile, the seller's ability to defend that resistance level, it weakens. They might still push back, right? They might still push back, but it weakens, right? Each time with lesser and lesser force, right? Eventually, when the buyers gain enough momentum, they push through the resistance, and that's where the breakout happens. It is often explosive because all the buying pressure that has been building up is finally released. So it's like the buyers were gathering the strength throughout the formation of this triangle. And then they finally overpower the sellers, creating this surge of momentum. So when you spot the ascending triangle pattern forming, it is your chance to pay close attention. It shows, now you know, right? It shows that the buyers are getting more aggressive. A breakout is about to happen that could signal into the big move. The key here is patience. Watch for that breakout, right? And when that happens, with high volume, right, is usually a sign that the buyers have taken full control and the market is ready for an uptrend. So what happens when price finally breaks through the resistance? This is where, things are gonna get exciting, right? So when price pushes past that resistance level, it's like fireworks, right? Things can explode fast, right? Here's why. Some traders, they bet that the market will go down when price hits that resistance, right? They bet that it's gonna, they short the market. They expect price to reverse and fall. But if price now breaks through the resistance, instead of reversing downwards, these traders are now what? They're in trouble, right? So the market is going now against them, right? They're shorting it, right? They need to act fast to avoid like bigger losses. So that's where the short squeeze comes into play. Okay, so now let's break this down. When traders trade the market in general, right? The stock market, crypto market, commodities market, whatsoever, right? They borrow shares, right? Or contracts to sell, right? So it's slightly different from Forex, but the concept is about the same. So they hope to buy them back at a lower price later, right? But when the market doesn't go their way of going down and instead breaks up higher, they are now forced to close all their short positions to cut their losses. And how do they do that, right? They have to buy back those, for example, shares that they have borrowed earlier. If a bunch of traders are doing this all at once, right? As they start buying back, they are what? They are adding more buying pressure to the market, right? So it's going to be like a chain reaction. More buying is going to lead to higher prices, right? Which forces all those shorts to cover their positions and so on. So this creates a snowball effect that can push price a lot higher really fast. This is why breakout from an ascending triangle are so powerful, because it's not just the regular buyers that are coming in to push the price up, it's also those traders who are shorting it, they're scrambling to close their position, right? So this adds fuel to the fire, right? And this extra surge of demand is going to make the market shoot up. When you spot an ascending triangle and you see price finally breaking through the resistance, that's where the potential for a big explosive move is coming. When the next time you see it, keep an eye for it. This is why this textbook method is a classic. There are several ways as we progress to trade the triangle pattern, right? And that's what you're here for, right? Depending on your trading style, your risk tolerance, I'm going to cover them all. So now you have spotted the pattern on your chart and you know, okay, the breakout is going to come. It's great. So how do you trade it? First off, the first method, the play that everybody does. You wait for the breakout. That is a safer play because it's with confirmation, right? So you wait for price to actually break above the resistance level. Instead of you entering earlier before the resistance level, in a way, with confirmation, when price breaks above the resistance line that price was respecting so well, that is your cue to enter with a buy position, right? So why is it safer? Because we are waiting for the market to confirm the pattern, right? Before we take action. It's like us saying that, okay, I'm gonna jump in once you show me clear proof that the buyers are now have taken control. It means that you are getting a little bit later. You're not getting inside the triangle. You're getting a little bit later, but it reduces your risk of getting caught in a false breakout. And that's where the price probably fakes you out if you enter earlier and then comes back down. If you are a little bit more patient, you want that extra layer of confirmation. This approach probably suits you, buying on the retest. Okay, so here's how it works. You wait for price to break out above the resistance level, just like before, right? Now, instead of entering right away, you hold, right? So now after the breakout, it's common for price to pull back a little bit and test that old resistance level, which now turns into a support level, right? So it's like the market is like trying to check if that level will hold before it moves up higher. So if price bounce off this support level and start rising again, this is a strong signal that the breakout is real and it has momentum behind it. And that's where you enter on your buy position. So this strategy gives you the chance to buy at a later timing, maybe even a slightly lower pricing after the breakout. It gives you solid confirmation. For the third method, this is where you are more aggressive. You want to enter before the breakout, right? So if that is you, this is a strategy that can probably click with you. This is where you enter a position before the breakout, right? So it can be what? It can be the trend line that is supporting it. So when price tests and tests and tests the trend line, right? It's always what? It's always making higher highs, right? And you add it with candlestick confirmation, entering earlier way below the resistance line, right? You are able to avoid what? False breaks. You are safer that way, and you also get a better risk to reward ratio because you're entering way lower. All right, now here's the thing. Obviously, this approach comes with more risk because what? Price might not even break out that resistance level, right? It could get rejected at the resistance level and then come back down again, and then probably even go on a full reversal back downwards. Whatever strategy that you choose, the risk management obviously is the key. Placing your stop loss is the key, right? So how do you place it? You gotta place it at a good spot, right? For ascending triangle method is probably one of the easiest way, right? You can just place it below the last low, right? It's always making higher lows, higher lows, higher lows, right? So you place it below the last low, the last higher low. That's one way. Along the trend line. So you place it below the trend line that you're trading if price respect the trend line. If price doesn't go in your way, higher lows, and then all of a sudden it broke that low, this is where you kept yourself out. Now, for your take profit level, you can measure the distance from the resistance line to the start of the ascending triangle low, right? And then you measure it 1:1. You can cross-check the higher time frame. So jump to a higher time frame level and you see if there is any key rejection level that is above it, ideal spot for your take profit area. Now. If that level is pretty far, number one, it will mean big RR, big money, right? Big risk to reward ratio. But along the way is a pretty far distance, right? So we still want to secure our profits along the way. And this is where you play what? The trailing stop method until it reaches your take profit level. Alright, so now for descending triangle pattern, it's just the opposite of the ascending triangle pattern. Everything else stays the same. Okay? For anyone just starting with trading, recognizing this pattern is going to give you a real edge. Like I said, this is a classic, but this is one of the most powerful methods that even I still use it today. When you spot this ascending triangle early, right, it means that you're looking at a potential upward breakout. Right? So this could be your opportunity to get in on a long trade before price breaks that level, breaks that resistance level and shoots up. So now on the other hand, if you notice a descending triangle, this is a warning sign that the market might go lower. So this is where you want to look for shorting opportunities or prepare yourself for a bearish move. Maybe get out of a trade or something if you are already in an upwards movement. Number one, identify the pattern early. The sooner you spot these triangles forming, the better it is. Right? It gives you time to prepare and to plan your entry strategy. Look for those higher lows in an ascending triangle. So then you make sure that the flat line of resistance or support is holding steady, right? So these are your first clues that a breakout could be on the way. All right, next, wait for the breakout. You gotta be patient here. Patience is the key here. You want to wait for price to actually break out of the pattern before entering your trade. If an ascending is break out from the resistance. If a descending, that's why it's break down below the support level. All right, so this is a confirmation that helps you to avoid false breakout. The third way, use volume as a confirmation tool. You want to check the volume. If there's an increase in volume when price breaks out of the triangle, a strong breakout with high volume suggests that this move has momentum behind it. Momentum is the key. This is a signal that the buyers in the uptrend are committed, right? So this reduces the chances of price reversing suddenly. Set your entry and your stop loss, right? So once you got confirmation, it's time to enter your trade, right? So use the three entry strategies that I mentioned above. First one, enter at the break. The second one, enter when it retests. Or the aggressive entry, enter before the break with candlestick confirmation at the trend line itself. Alright, so now for your stop loss, here's what you got to do. Place it below the last low, right? The most recent higher low or the trend line. For your take profit, we always got to plan for our exit strategy, right? So that's where we can aim to measure the entry point to the starting point and then upwards 1:1. So this will give you a projection of how far price might go. You can also, second method, cross-check the higher time frame. Where is the next key rejection level as your take profit level? And remember, pro tip, you can then use, if it's kind of a little bit far away, use your trailing stop to secure your gains while still allowing your trade to run towards that key level itself. So thank you so much for watching. If you enjoyed this video, please give it a thumbs up, right? It really helps to keep the channel growing. And if you are new here, don't forget to hit that subscribe button and turn on the notification bell so that you never miss an upload. So we also love to hear from you, right? Drop a comment below and let us know what you think or what you'd like to see next. I mean, your support truly means the world to us. It keeps us motivated to bring you awesome content every week. And if you're keen to learn more, I've created a free 5-part comprehensive training where I show you exactly how I trade using my lifestyle method. Link in the description below.